Okay, how are you guys? Howdy, Paul. How are you, mate? Let me just try to get better reception on my internet. That does the trick. We're up and running, guys. Welcome. So we've got a few people in at the moment. They'll gradually come in, I'm guessing. Oh, then I've got to refresh my. There we go. All right, so we're coming through nice and clear. Paul, you there, mate? All right, let's get started. Welcome to Trade Setup in the live stream. It is what do we got there? The 27th of the 9th, 27th of September, to be more exact. Markets, we'll go through just the usual, have a look at the overnight markets. I want to show you on the ASX especially just because I've sort of flipped over buy short potentially um, just in this short term. I mean, who knows where it's going to go to, but we'll go through that in a minute. But in saying that, we've got, I think, 6 trades, 2 shorts, which are going in our favour, and 4 longs, which are going in our favour. So it is a bit of a mixed bag out there. And it really goes to show just to try to pick out those, those prime setups, those prime entries on structure or price action or however you trade that are, sort of A+ trades for you, rather than picking something with a bit more, being a bit too overly aggressive on the long side when the market's looking shaky, or vice versa on the short side, thinking it's going to crash, but the market's actually still, weekly trend up. So it is a mixed bag. On the daily, I see the potential to make a few bucks on the downside, um, but also the weekly is buying it. So yeah, Vocus. Well, I haven't looked at it, mate. I remember speaking to someone a while ago about Vocus. Is it VOC, isn't it? Um, they had it. They had it all the way down, unfortunately. And they're asking me about that, so I could have a long way. So it's been over a year, I think, since we spoke to them. But let me just check it. Let's see where it's at. Let's get up and running then. Oh, starting to look all right. Yeah, I've got my eye on that chart. It's for me that weekly. See how it's starting to come out there? I don't mind that. Just want to see it pop up, pull back, especially on the weekly, pull back, build a higher low, and then go down to your daily for the entry. It's looking good though. It's starting to show some signs of life, considering what's happened the past few weeks. What was that since 2016? When we're talking about the past few weeks, absolutely poleaxe, wasn't it? From 950 down to 250. Alrighty, so let's click over the markets. Let's just see what's happening. We'll get onto our XJO. So overnight, the US. We'll just go there. Let's just see where they're actually at. Got to get this done. Indices. There we go. Dow. Done. So you can see the last few days sort of been pullback mode here, and that's after getting into the highs. And so it's good to see them into highs, but it's also a tad concerning. So a lot of the times the market will, it's come off quite a low base, considering those highs are at around about, what are they, 26,600, give or take, and the lows were down at 23,326. 26, what's that, 3,300 points. That's a bit of a drubbing on that, and it's lifted up, and we just popped our head through the highs. So now, I mean, if you trade the Dow, if you're watching this, you'd be really wanting to pull up now and start to see some buying activity jump in and start to support that as it should be, to build that higher low and grind back up to new highs again. Same old story over there. They still got headwinds, but I think I was going to say the RBA, the Fed Reserve came out last night, lifted rates. Everyone expected that. They expect another one by the end of the year, but they're also expecting, I think, 3 or so for next year, 3 rate rises. Now, I think they dropped the terminology. Don't remember what it is now. It's gone from my head, but they're basically saying that they're going to go towards their target rate, which would put it somewhere around 3.5%. We're currently at, was it 2.25, I think. So they are looking towards rate rises now. The thing is, with higher interest rates, as it grinds higher, it makes cash and bonds look a bit better as an investment, especially if this is, equities over in the US has been the only investment that's really yielding returns. So it could be, I think there's a few people are hanging on because, equities are strong. You're sitting on gains. It's still going up. There's no one can deny the market is still going up. These 3 days don't mean anything. In the grand scheme of things, this is just pushed up on a weekly, had a bit of a pause, potentially holding up above 26 and going again straight through 27,000. So no one's really willing, if you've been into the market over in the US for a while, or the US traders at least, have been in the market for a while, you're sitting on healthy gains potentially. Why would you bother diving for the door just because? I'm guessing if you've tried that before, you've been proven wrong. Probably proven wrong a few times. You probably dive for the door here, maybe jumping back in, getting churned out there, looking for the shorts there, and it's turned around, just come all the way back up. So I wouldn't suggest that people are diving for the door now, because they're still it's still that, how to say, that balance between raising interest rates and a strong economy, strong growth, so on and so forth. So they were really just looking at, okay, we all know that they're talking up another, what, 4 interest rate rises. Now, what if inflation doesn't kick off as hard, or it starts slowing down? Then there's probably going to be one less rate rise. All these sorts of factors coming in, then it might be better for equities. So there's all these sorts of things, but they've come out and dropped the terminology last night on whatever it was. You can Google it on Reuters, by the way. Um, so it's really just they're sticking to their plan, sticking to their path, and they see growth in the economy over the next 3 years, probably, or more. So that would mean inflation, and that means they're going to stick towards their interest rate rising policy or path or plan, which may mean that there's less liquidity to continually go into equities, and you might find some just go, look, instead, or say large funds, just go, rather than jumping equities and start reaming those higher, thinking that they're just going to continue on. Let's put some over to bonds, or let's put some in cash and get the yield over there as rates rise. So it's going to make it more and more attractive, which might just put a bit of a handbrake on equities. Doesn't mean they're going to come off and there's going to be a big drop out of the sky, but it can mean that they're going to start to see the push, maybe a push higher is not going to quite reach the high, and there's more of a macro correction. You might see this correct lower, then start to buy up again as it becomes more value, back to this longer term 200 MA, then back up again. All these sorts of things. I don't think it's going to be a straight out bull run like we've had the last few weeks. A few months. What am I talking about? Pretty much all year, from about April. Really good look at the charts. I don't know for dates. What do we got here? FTSE. I'm looking for S&P. S&P pretty much the same. Last few days has been sort of backing off out of those highs. They pushed into all-time highs. They're more recent than the Dow. Now the Dow, a good sign that's pushing into all-time highs, because there's less emphasis in that respect on tariffs. And as soon as they come out and said, okay, 10% rather than 25, bang, the market started really kicking on. That's when the Dow really drifted up through those all-time highs. But the S&P obviously they break through back in August sometime last month. Had a bit of a pullback. So we could be looking at the same thing here on the Dow, a bit of a pullback back into new all-time highs and just grind their way higher. And so any of the bears just continually get squeezed out of the market. And this can happen. It happens all the time. Everyone's looking for a top. So the more people looking for a top, it can just mean more fuel that people jump back in short, get squeezed out, jump back in short. Because you know what the ego is like, you know what the stubbornness of traders is like. If you're anything like me, I can just kill myself if I get my head in the wrong space and thinking this should roll over and trying to prove myself right, rather than watching what's happening in the market. And I think that could be the catalyst for just a continual grind higher. I'm guessing if there's going to be a major pullback, a severe pullback, we're not really going to see it coming. So you've really just got to, follow the trend and respect your charts of what you're looking at, even your fundamentals. Respect that. Trade the way you always have, but know exactly where your risk is in case you're wrong. I think that's the most important thing. Let's go over this. There we go. This is the XJO. So I want to talk about this. I'm not really worried about what's happening over in Europe. I should have shown those charts, but not too concerned just there. I think this action, what we started to build the last few days. Now we've spoken about this quite a few times. The style of move. So when you've got an uptrend and then you get this type of move off the highs, that's that's not too bearish. Sorry, it's more bullish. The edging out. So that's the good ramp up. they're edging out. So of course you're going to get that when things get extended up here. When they start to get extended up towards the highs, there's always going to be, and I would do that exact same thing. I'll be taking some, maybe a partial, getting out of the position, and just seeing what happens on the way down. And then when you get this type of price action, I'm always in the mindset like, okay, I'm looking for a high low, and if we can get that, that's ideally what you're looking for. Then you tend to get a sudden move up. So these moves here are not very sharp, but then when you start getting a sharp one that potentially takes out the previous anchor, and then you get a pullback, I'm always looking for longs. And it's the same, if I draw it in blue, on the downside. So we've got this sudden move down, followed by this type of price action. Now that's not conducive of the very strong bullish market in my respect. And we've just probably potentially built a double top. Only inside, it's the last couple of days, probably, was it yesterday and what was yesterday? Wednesday, Tuesday, Monday, Friday, and the highs on Friday. So we just touched on that. Doesn't mean we're going to roll over. And you can see we've just come back to the MAs. So that's it's the MA, yep, the 20, I think it is, touching on that. So there could be a chance that I'm looking at this for a potential breakdown and looking to short it. But in saying all that, so this is the daily trend. I don't think the daily trend, everything in my mind, we're getting a bit overcooked up here. So last time we were overextended back at the end of last month, we're up here. We're up at 63.50, say 63.75. Now we're extended. The Bulls are giving a good nudge, really trying to push it higher, giving it a good lift, and we can only get to about 62. So that's showing, and with that price action that we just said, this type of price action, they are giving a good nudge. They're trying to buy it up, but there's still quite a bit of selling in there. There's, either the market's just thin, and the bulls and bears are still in some sort of agreement, or it's a heavy buying, but it's just as heavy selling. So that's the way I'm always viewing with the stochastics and what their price action's been. This is quite sharp and hard, that sell off there. A lot of heat's coming out of the market, and then we're starting to grind. So from here, in saying all that, even if you do get short, you've got to be wary that what the overall picture is. And this, to me, this price action, I'll draw that up, is looking more, I'm really biased short on this, but I'm always going to be, is that what I wanted? That was it, wasn't it? Yep. I'm going to be biased. You can see that that's sort of starting to break down. You've got that wash out of the highs. I'll draw that a bit clearer. Wash out of the highs here. And then we rolled over. And that was after breaking the anchor. So the anchor was pretty much, you can see only barely. I'm always big for these anchors, even if it's that resistance zone. As soon as we come down and touched here, your heads up, you should have been, okay, what's going on here? The market's potentially rolling over. You don't, in a strong market, it generally respects the trend. You've got the algos, traders, everyone's looking for these sort of, touch on the trend line and up she goes again, touch on the trend line, up she goes. Instead, we broke through it. So that's got to be a heads up that, okay, something's happening. You wouldn't short it there. You wouldn't just come straight out of the book and short it, because especially on indices and currencies alike, I'm always expecting, once it goes down like that, expecting a washout of the highs. And what that does, it drags people in. Bigger players can get set easier. They tick off the buy stops there to sell into it, and it comes straight back down again, which it did. And so you got a good sharp move down. So now this market, this is looking like that a chop up, and then potentially that secondary leg down. Now that could take us down to 6,000. I don't know. It could completely capitulate. We don't know. Or it could just be full short. I might get short at 61. I think we've got it at 61. Let me just see the chart. 61.58 thereabouts. This is the CFD, by the way. You can trade it however you want. Around 61.58. Our exit was at 19. I think it got to 18. So it's still active. I'm just keeping an eye on it, whether to leave this active or just potentially pull it off there as an alert. But we'll see how it goes. So that's the entry down here. Now, if it does push down, like I said on the ASX, we push down, we could fall short. I might get up 20 points, 30 points. It may just build your higher low and really clean us out. A bit like this price action, if you can see, this grindy sort of move higher, you come down, you build a high low, and then off she goes, bang, straight up. It could do exactly that. And this secondary leg doesn't play out, or it does play out. Or it could touch down at 61. So I'm going to look, if we do happen to get short, for instance, I'll just be really watching it closely. And if we drive through 61, then obviously the next target, and that'll be from the weekly, is around that 6,000 mark, which we could easily do. The weekly trend is still up. We'll click on that. So the weekly trend is still up. If we draw this up, you can see that's the trend line there. So it could pretty much play into the hands of a test of that 6,000 mark and still hold the trend. I mean, this is the weekly anchor around 6,000. You've had this leg up, pull back, leg up. So we could easily come back down 2 legs. And it is going to, what it'll do is sucker in a few bears as well, if that's the case, because you'll suck them in. They'll think it's, okay, we're going to roll over. There's going to be a big crash in the US. Bears are bears. They're always looking for that sort of stuff. But unless it breaks the anchor on the weekly, it's the trend is not, it hasn't been broken. The trend hasn't changed. It's just suckering in with one potentially up, 2 moves down, holds the anchor, and then up she goes again. And all those bears are getting squeezed back out of the market. If that's what the case, if that plays out, we'll have to wait and see. But either way, it's a potential short. It's worth a bit of a crack. You're not risking too much in the scheme of things on the daily. I mean, I'll be looking at the SPY or the ASX 200 CFD if you've got access to one. I was looking at the STW, but I think the STW did this today. Gap down. I don't know if it's divs or what happened. So I wouldn't be touching the STW. I mean, if you shorted it here, pretty much you want to short it around 58.50. Instead, it's gapped down here at 57.75, and then it's gone. So I wouldn't touch that, guys. I think it's an ETF, it's a fund, and we all know what funds do. They stuff around their price too much and sort of lean it. They're always going to be biased to their side of the market, I'm guessing. So in saying all that, best fit. Yep, I'm sort of biased down. The market has been choppy the last few days, so we'll just keep an eye on that. But just keep an eye on it, guys, for a bit of weakness. I'm not saying I'm right or wrong, but it's looking a bit heavy, especially the fact that you're coming from below the MA. The MAs are crossed over. It's probably good to see, where is it? End of day. That's what I want to know. Thick. So it's probably a bit easier to see. I'm looking at the MAs a lot, the EMAs. This is the 20 and the 50. They've rolled over. So when they cross, a lot of times when you come back to retest, you can retest those MAs and start getting heavy again. But I mean, if it's from the top, you're sort of looking for a bounce. If it's from below, you tend to be looking for that secondary leg down or a shoulder trade. This could be the start of a big shoulder trade to the downside. If it does play out, we've just got to be on guard. If you do get short, to be on guard to see where it goes to. I'm not saying it's going to go over. It could go 61.25, 61, straight through to 6,000. 6,000 would be great. But we'll see how it goes. Any questions there, guys? Do you agree? Disagree? Put your hand up if you're a bear. Raging bear. While I'm waiting there, we've got, just to go over what we have and what we don't have. All right. So these are positions. We've got TER kicking along nicely. Can never quite remember where we got into that. Let me close that down. TER was 52. Somewhere around here. Okay, we got in about here. I think it was here with the pop-up. Took it on a pop-up here at 52. It's just been grinding high, and that's a beautiful trend. It's looking really nice. Doing quite well. Grinding higher, and it's really where we're going to. You can see that weekly it's probably easy to see. No, it's not. It's a bit tough to see. I'll just have to minimize that a bit. Is that easy to see? So you got the lows pop up, pull back, built some high lows between, say, around 15, started to lift again, taking out the previous weekly lower high here at around 48, 49, 50. Took out that level and it's just grinding high. So to go down to the monthly, I mean, I don't really think we need to go to the monthly. Yeah, the trend is well and truly up. We've taken a partial on that, I think. Did we take a partial? Partial at 59, booked in 13.5%. We're up 28.5%, probably more than that, close to 30% on that second half. So we'll just keep trailing this time, and there's nothing else to do now except watch the action. So if you're in this one, just continue to, I'm happy. I think we've got our stop. Let me see that again. I've got all my data on the left screen here. 56. There's a good chance, actually, I'm going to be raising that. So anyone that's watching has got this. You can raise your stop, I'd say, to around 60, just to lock in some more gains. More than happy to raise that. It's been grinding high. It's come out some good news yesterday. I think some positive news, which is going to give it, you would expect it to give it a lift. It's just really well controlled. You can see that the moving average, just cruising higher. It's respecting that moving average, touching on the moving average, kicking higher, touching. Now, if we don't touch and we go straight through, I'd rather be out because I've got a feeling we're probably going to end up with a macro correction at some stage and get some lower highs in the daily. You're just grinding lower. Then we can look to re-enter it after that. So that's looking good. CDA, another one, took a partial on the sort of spike at 35, I think it was. We had our partial at 40, 340, got to 329, of course. That just gave me the irrit, so we got out at 335 and a partial. We've still got the second remaining on, and we've got our stop. Done it again, didn't I? We've got our stop at 310. Stops down here. Happy to leave that. It's above our entry at 299. Just see what happens from here. Same sort of different price action. This is more, it gets a bit jerky, so it'll sit down, retest, build again, boom, up in about a three or 4 days, and it takes a couple of months to consolidate, build a higher low, and then go. And it does it within a few days, and that's what we've seen. This little spike up. This, whether this little spike up, whether we're starting to run out of steam, we just have to keep an eye on it. But that weekly trend is still looking quite good. As long as we can sort of consolidate up here and hold above 310, obviously that'd be good. But if we do take out if we get stopped out, I think it's taken out a few days lows, I'll be happy just to take it out, call it a day, and see what happens. KGM, we're short on that at 605. I don't know if anyone can see that. Obviously, let's just go back. The price action, you've got essentially a double top and a failure up at $10. Big sell-off shoulder here, another secondary leg higher. Come back up, retest that level. Fell a tad short, so we've got a level up at 750. Tried to go here on this candle, couldn't make it. Straight back down again. So that was an open high, straight back down to the end of the day. Session closed lower. Tried to go again, retested that level, so a tad short of the previous 750 zone, and then gap down. Obviously, bad news driven too. Directors selling. They just had I think they had a decent report. I didn't read the whole thing. You normally read the start and it's all positive, and you got to dig around at the back of the report to find the negatives. They try to hide them, but anyway, it didn't look too bad. And we've got a bit of a positive day. That green day there, you can see just before that was some solid volume too, but it's still looking weak. If we can get through, the lows at around 69, 65, a few days, I think that's going to take out that low at 62 on this candle. And then I'm looking towards, I think we've got a partial at 550, I think. But I'm still looking towards that $5 mark. Otherwise, if we don't do anything the next few days, I'm happy just to probably cut it. You never want to give shorts too much reason to just sit around and wait. It just changes people's perception. If it's not dropping like a stone, they tend to just start to find a bit of bait. It becomes a bit of a grind, and you're better off just jumping in along. That's my view anyway. Short's always a tad harder. West Farmers, we're short on that at 535 thereabouts, I think. 535, doing nice. Grinding low. It's this green candle here I'm a bit concerned about. We're overextended to the downside, but the weekly, you can see the weekly still heading south. So we could come down to about 49. If we can get to 49, potentially just going to book something there to see. We did just about get there yesterday, but bounced off straight off the open, so I was just sitting there watching it. So today, if we can actually push through 49, see how we react down, 48, 75, 80 zone, potentially take a partial, and just let it go. See how we go from here. The other ones, that's MOY, potentially starting to lift. You can see it's holding up here. We got in at 22.5. It's been choppy around that zone. We're up for a bit, down for a bit, up for a bit, down for a bit. So it's been choppy around 22.5. It's right there now. But you can see the stochastics. There's some selling pressure coming in, but it's getting soaked up okay. And you can see this push down. If you're looking at selling pressure, this push down, it sort of the price went sideways, lifted. This push down, we've got price sort of backing off from that high. Probably got a bit extended, but it's starting to hold 22. It's coming back to the MA. I'm expecting it in the next couple of days to lift and potentially push up to the highs of 25.6 zone. It's the weekly that's the big kicker for me. I think that weekly chart looks really, really nice. So you've got a big spike up, pull back, secondary spike up, lower high, took out this previous lows, and then started to settle down. Buyers started to step in, grind it higher, another retest. That was a higher low, and we're starting to lift. So off this high low in comparative to 15 and this inside high low, I'm expecting it to take out 25, 26 and potentially grind up towards the 30 mark. It could just accelerate. This is the kind of stock that could just take off. So we've got that on. Talking about taking off, I hope someone got into Mesoblast with us. We're pretty much into that at 175 and it hasn't looked back. It makes my partial yesterday at 199 look stupid now. But that's the nature of the game. This is our last position. That's just gone bananas. And that was sort of more based around the weekly. Now, you look at that weekly could still have quite a bit to go. It might find we react off the 200. I'm not a big fan of that sort of stuff, but we could. Or it could just blast through and we start trending up to these highs at around 33.25 or so. But either way, that's looking nice and strong. It is obviously you're going to expect some sort of profit taking up here. Potentially going to raise that stop to just entry at 175 and just let it go. See how we go. That's it, guys. Any questions on those? Chuck in some, put in some stocks that you want to take a look at now. If you've got any questions, feel free. I can show you just as a matter of interest what we've been following on intraday. I think so. This is what obviously I told you I was just going through intraday. This is your minute chart, so there's reasons why I'm looking at each one of these. I'm just showing you that there's actually some action that plays out. I know it's not your typical trading. It's not your typical trading like a lot of people think, but it's just to get an idea that you still have price action that plays out very similar to, on your daily charts and your weekly charts. You're still looking for that, respecting that price action. So if you're ever thinking about getting intraday, I guess you're working on your price action. The next step really is, once you can understand that, it's probably a fair bit easier on the daily. If you're trading daily and weekly and so on, it's a lot easier to trade that way. And it's obviously a lot less to do with not a lot less to do with fundamentals, but this intraday action is more people playing around, that more fear-based, which I love the intraday action. So this is just what we marked up the last few days. This is, by the way, if you do want these charts again, just email me off and I'll shoot them out to you. This is off the 1 minute chart. This is API. You can see that big gap down, bounced a bit. So that's that euphoria, not euphoria, but people just trying to bargain hunting. And then that was a couple of minute candles and then the next red candle. And then you had your entry, very aggressive, but you got low risk, and then just see how it goes from there. And it actually played out all right. If you could hold it, you probably, if you held it to the close, you wouldn't have got much better exit, but you probably could have got a better exit sometime during the day. But either way, that's one example. That's API. We've got JIN, J-I-N, another good example. And this is the same price action we say. You've got that run up, a pullback, you're building your high low, a little pop up, and intraday, you're still building an inside high low, which is confirmed the next day on the open. So that's why I've marked up that open there, that little pop up. You can see that was yesterday just on the open. I can't see that on the chart, but that's off an inside level, quite a strong technical pattern. And then you're looking for a run up through at least 730. And because of the daily structure, the daily was up, looking strong. It's really worth a crack at that. And you can see it paid off quite nicely. I mean, if you could hold that on, through this sort of consolidation, and then you get that secondary push up, you've made out all right on that. Another example is LNG. That was a short. I was sort of biased long on that one at this stage when I was watching it. So I probably wouldn't have taken that trade. I don't think I would have taken that at all, but I just sort of mark it up as interest. So when you do see some weakness come into it, and weakness by I mean you've got a good strong up the previous, good move up, a good strong move up. That's what I'm looking for. The previous day, pulls back, tries to go again during the day, and finding constant selling at around 71 cents. And then the next day, you can see it gap down on the open and then come back up to retest that 71 cents. So if there's a big seller there wanting to get out for whatever reason, they're defending that level. So then you've got to look at it, go, okay, if they defend that level and you get some further selling come up because someone wants to book some gains from the previous session or the previous couple of sessions, then you're probably going to be biased just in the near term, even on the daily, intraday, biased down and just see where it goes to, see how much strength is going to come into that selling move. Didn't play out very, really, really nice, but there was some action there for you. And this was Mesoblast, so this is the one we love. I was looking at through 190 yesterday. I think I got onto that one through 190. It ticked off out around 197 or 198, I think it was. And then it just went sideways. And then you got the second lift towards the end of the day. So that was actually quite nice. And that was more on the open, because on the open you can see that previous sort of resistance zone around 190. It was matching off around that zone just below it. And I thought, okay, if this goes through, it's going to drag in a bit of buying and it's going to probably give it a bit of a run high. And it did the first few candles, then it stopped for a bit, and then it went again. So that was a cracker. And that's a similar, very similar. You're looking for trying to interpret the price action. I think this is the last one, OFX, similar type of thing. So, all right, that's a Whitehaven. Anyway, guys, if you want those charts, just let me know. Excuse me. All right, we'll get into it now. All right, let's have a look at so COE. Good. Cooper Energy, you put that up. Gino, well done, mate. That looks good. Excuse me. I have a bit of a throat, not, I wouldn't say infection, but I had a cough. My kids have had it. Mice had it. It's my turn now. Awesome. We'll have a look at that, Preet. So just trying to suss this one out a bit. Just trying to get some levels. So obviously you can see a level. It's probably around through that 50 cent mark. And we touched on 50 cents. This is, I know it's a long time ago. Pull back, took it out, respected it again around that zone on the lower high, pushed down to 30 cents. You can see here. Pop back up again, respected it before we sold off quite hard. You see that a bit better in the weekly. Was that 2015? All right, let's go back one more step. 2014. So that was here. All right, so that's around that 50 mark. You got that 50 cent mark. That's when we had the big sell-off, pretty much the end of 2014. 2015 was a bad year. Started to lift 2016, lifted up here. It's a lower high again. You pull back, then you started holding some higher lows, which longer term is a good sign. It's just whether or not, and we'll draw it up, whether or not this is going to be, I can't really see it. It's a bit harder to see. I want to so we've got roughly this leg up here. I'm guessing that would be fairly similar. So 26 up to 50 is around about 25 points. We've got somewhere around 14 up to 38. What would that mean? 25, give or take 25 points again, am I right? 26 up to 50 is 24 points, and you come from about, say, 14, 12 up to around about here, 38. It is. So this is the only thing. Just looking at that weekly, you've got a big sort of zone. We all know that it's there at 50 cents. Had the market sell off. It's made back those gains. I mean, it doesn't mean that it can't just keep going. It's just to bear that in mind. We did blow out through that zone through 50, which is good. That was a few weeks ago, a couple of months ago maybe. But it has taken it out in your typical two moves. One up to secondary extension, or we call it volatility extension higher. COE. Oh, was it Gino? Yeah, sure. I try to take notice of them, don't I? I do have these on actually alerts, but I just watch them intraday. Oh, sorry, on the daily charts. But we'll see with this one, it's taken that second level. So this is the sort of the zone that we just want to be careful of. There's nothing to say that we can't just pull back. I'd like to see it hold around here, do a bit of work, but hold above 40, and then you potentially got a move that's going to take us up and through 50 cents. But you want to go down to the daily for that, and potentially we're just starting to see that. It could be early days, but if you just mark it up, it might not be early days. This could be the move that can take us up through 50. Because don't forget, I know I look at all the different charts in the daily, weekly, monthly, all that sort of thing for levels, because they're just interesting levels. And if not much has changed with the company, you've had some good reports, bad reports. Over the years they've done what they've done. Those levels can be still respected for partial exits. Depending on the market might be rough. So you're up at resistance, and people go, look, the overall global market looks like rubbish. It's going to roll over. I'll just book some profit. So that's a psychological, especially if you're sitting on some healthy gains. So those sorts of things happen all the time. That's why I like to look at the different levels. Um, but in saying that, it's more the shorter term ones that we would want to take notice of. So for me, the daily and your weekly are sort of the two that I focus on. And the weekly, like I said, we go back to that weekly. We've had this push up into that 50 zone, and it was quite extended. That was a good, strong move up. Bang, back to the MAs, which is always a good sign. So we are back to the MAs, which is good. Stochastics, for me, that's a good little spot. Not a bad spot on the weekly. It's in a prime area where it could just blast up through 50. So that's why you're dropping it to the daily for your entry, and you do that pure and simply to get less risk on the trade. And we can see from there that potentially a move up through 45 could be a goer. It did get there yesterday, but I would ideally look to see a healthy move through 45, then a pullback to get my high low, and then off she goes. That's what I'd be looking for. I don't. Yeah, look, you could have bought that yesterday, actually. I mean, your risk is going to be down at 40, say 41, 40. You can put your risk down there and just see how it goes. But I think that's starting to curve up. I think longer term, it's just the weekly that gets me a bit. I think that's on the daily. This price action is a little bit too premature. I guess I'd say I'd like to see a bit more work done on that because it's had straight. It's like a V shape or inverted V, straight up, straight down. I don't necessarily think this is going to get us straight up through 50. If it can do a bit more work, spend a couple of weeks sort of chopping around here and then start to lift, yeah, I'll be more confident in it. Because what it's doing, it's that match off between buyers and sellers. You've got more buyers coming into the action, more sellers coming into the action, but they can't quite move it. So when it starts to pick a direction from there, it has sort of more support from buying or more support from selling. I mean, if it does roll over. But these sorts of moves don't have that much support, that V-shaped type of move. Now, when it shoots up, potentially when the way it's come back off, it's not heavy selling. Um, and you can see, well, the volume wasn't it was not too bad. But that's why I just like to see a bit more action here. It's sort of holding in maybe a couple of weeks. Maybe this week doesn't go too far, has a bit of a pullback on the weekly, and then the next week starts to lift, and you can see it on the daily. It's showing a better sign, potentially more like this, or if we can draw that up better. So this has come down, sort of chopped around here a bit. We just started to lift. Well, we just come back into the zone. I'd rather see if we can get something like this, maybe on the daily, inside a real inside low. Then you can obviously minimize your risk, and it just means that we've got more time under our belt. And I think that's going to be a stronger setup than just buying it on the break here with your stop below there, which is below 41 thereabouts. That's 41. No, it's not 42. This is 42 here. That support zone through there. Does that make sense there? But we'll see, Gino. Keep an eye on it, mate, for me, will you? I'll probably forget. AGY, let's take a look. It's choppy, which the good thing on this, you can see it's had a bit of a gap fill here. If we go back to the daily, it gapped up, it's come back down, pretty much closed that gap at 20 cents, and then potentially we're starting to lift. So, I mean, if you've got this stock on your radar, AGY, don't worry, we won't worry about the weekly too much because that weekly's had a good run up, but a lot of heat's come out with this move down. All right, I don't mind that at all. We'll drill into that a bit better. So you can see it lifted, high, low, started to go on a bit, and then started to get a bit faster. So the rally was getting stronger, faster. So the harder and higher it goes, the harder it can come back. It had a couple of good on the weeks down here, back to 20. Inside level, you can see the contraction, the volatility is coming out. The length of the bars are getting narrower or shorter, and then it starts to expand. So you're getting that. We always say this is expansion into contraction into expansion again. So you're always looking to try to trade into expansion. So you basically don't muck around. You're not sitting there waiting for something to happen. Pretty much when you get in, it's the prime position where the action plays out straight away. And that's where you're going to get more bang for your buck. You might give up a few cents, but you're not going to waste your time sitting in something just waiting for either news to come out or to start ticking off or starting to move. So that's ideally that's the nature behind or the style of trading we do or the way we trade. We're looking for that market when it goes into expansion, ideally off a higher low. I'm guessing if you can see that, probably not see it. Where was it? It's about here, wasn't it? You get these little high lows. You can see that. You can see that starting to lift off high lows. Ideal just in there. So it might have taken a few days, but then it kicked off quite hard from. I mean, if you can get him somewhere around 26, you lifted to about 40. Great, healthy gain. All right, back to it. And then we had this sell off. So what we're going to do now is just really see where we're at on the daily, whether this could be worth a buy and whether we're looking for it to go back, because this is contraction, whether we're going to see it go back into expansion. You can see, depends where you take it. I mean, see how we've got sort of resistance zone through there, or potentially we've got, potentially that's it. So that's the risk you take when you're looking at it. And that's where it comes into play, your weekly charts, just trying to assess, is this still a bit choppy on the weekly? Have we got to get a bit like this? It was choppy here, then it took a fair few weeks for the market to contract. So you get that point of agreement between buyers and sellers, then boom, buyers went out, market takes off, and away you go. We don't, technically, we're not really seeing that point of agreement yet. It's still on the weekly bars, are still quite volatile. There's a bit of movement, a fair bit of movement. So that's why I'll be leaning towards, where are we? I'll be leaning towards this sort of top resistance line potentially. You can always do that. I mean, if you go off this, this original one, actually, would you want a different color? Just say orange. All right. So I'll be sort of leaning towards the orange one. So for me, if you were leaning towards the pink, it's probably not a bad entry just through here. Your risk is, so it was about, say around 22 from 28, buy it through 28. Your risk is below that high low. It all looks pretty good. I mean, that's a pretty healthy sort of a move. That's typically what I'm looking for. It gapped up, filled the gap, starting to lift again. It's just whether or not we're going to pop up to 30 and then roll over if this sort of resistance zone comes into play. So that's always the risk, and that's why you really do have to know exactly where your risk is and how you can minimize it. And that's why we're always sort of looking for these high lows to work off, because it just minimizes your risk. You're not throwing too much at it. And if this is, the market's going to respect this 30 zone potentially, that resistance, or the orange resistance line, then it's probably going to come off, and you might find that it's still going to be a bit of a squeeze. And you could be sitting there, have your risk at around 22, 23, and still stay in the game. It doesn't squeeze you out, and then it starts playing out, and you get a break up through 30. Fine, but we could also see a bit of a rollover and retest to 20, retest to the lows, and then it takes a lot longer to build, and it's more of a weekly based type of trade. Retest to 20 and then start to lift again. So all these sorts of things, I feel, should be just going through your head, trying to assess it, and just all you're really doing is looking at it, saying, okay, probability wise, what's the probability of this trade working out? I'm always taking both the weekly and the daily into respect, and say, okay, the weekly's probably got a bit more time. That daily looks like it could be a setup. Well, maybe it's like 60, 70%. It could work out. I could be up, even if I'm wrong on the daily and the weekly plays out, I could make a little profit. I might get enough opportunity to get in, get out at a little gain. But if you get the price action on the weekly is stacking up quite nicely as well, I would add a higher probability that you're in the right zone. It's starting to lift. You're getting better price action, like what we saw here on the weekly. This type of price action, that was over a couple of months. We've only spent probably 1.5 to 2 months just holding, haven't even held the higher low yet. Whereas here you can squeeze in. We're at about this stage, say, this green or red candle. So potentially it was another month until this trade kicked off. So we could have another month up our sleeve. So that's what I mean by just trying to add a probability to trade. Is it worth throwing your money at? And then if you say yes, okay, go for it. If not, maybe just keep it on the radar for now. Either way, I like the daily, but it's just the weekly I've got a bit of reservations with. that was a big word for me, guys. All right, Murray, what was that? Argosy. What about next? XVI. What is it? I'll skip that chart. What was that? What does that say? Something's obviously happening. A bad tick by the looks of it. All right, let's just go to the daily. There we go. Volatility index. Okay. Volatility. Oh, by the way, Murray, did you mention gold the other day? I just had a look at it, and I was thinking about shorting it, to be honest. Can't see. Let's just see. This is gold here. I think it's at that structure now where if it doesn't hold up here and starts to roll over and hold another lower high, I think it could go through 1188 and start to test down towards that 1169, 60 zone. But you can see what we're probably looking at here. You got resistance through here. Your anchor, it's tried to go up. It's held even that zone through here. It's held there a few times, a lower high. It's starting to find weakness. Then you've got potentially another lower high in here. So just keep an eye on that, mate. Yeah, all right. So back to the volatility index. Trading it, yeah. Just trying to think. It's probably look. It's back down to if it's 10 is sort of a line in the sand by the looks of it. You don't really get setups on these sorts of things. You can see when it spikes up, it just goes boom, 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 and that's normally on the back of obviously global fundamentals, big obviously sell-offs generally. I guess you could just about match that off with a sell-off at the start of the year. 18, 15, yeah, sell-off here, 15, capitulated here. So when you get those bigger red candles, that's when your volatility starts picking up. In saying all that, I would suggest that sort of that 10 mark. Can you actually trade that? Yeah. So I wouldn't go near it until it. I would suggest probably the best way to trade it. You got to match that off with highs on the index. And if we are looking potentially at a high on the index, we've got a couple of red candles here. So that's just a bit of heat coming out of the market. And you can see that by, if you look at the daily, it's sort of a bit of a grind on the daily chart. Here we go. This action is a bit of a grind. So the volatility is coming out of the market. This is when it would have picked up. I'll go back to that on that. Why can I get there? Go back here. So it's picked up a little spike up, and then it's been coming off the last few sessions. So you're really just looking for it to spike. It'd be a tougher one to trade because it could get choppy. Just you whip around, and then you're looking for these big days um, to take advantage of it. I would potentially trade options around this before anything else because you just trade a position and you can hold it for a while. It's one of those things where it's not really going to go too far down, and we're probably lean on this. I'll be leaning on the side that it rallies quite sharp sooner rather than later. Um, yeah, so you could probably potentially just buy it if it's a CFD or as a stock. If you can buy that ETF, if you can buy that XVI, if you trade it on options, I'd potentially buy a call because if it's low volatility, don't forget calls are quite cheap and volatility going into the options. And if you do get a spike in vol, you're going to get that double effect where it appreciates in price. So if you've got a strike, say for example, 13 cents, you're buying it out of the money. It could easily go in the money really quickly. So two things you're going to get it going in the money. So your bought call is going to make value on just the price plus a spike in volatility. So you got sort of twofold. We had a guy once, he actually bought some puts on, up here, for example, did some puts on it. But the problem is, if you're buying puts for a drop in volatility, yeah, you get your drop in price, but it's offset by the drop in volatility itself because it goes up into making up the price of the option. So it's kind of a pointless exercise, and he just was watching it, everything work out to plan with the trade, but the actual option itself would not increase. It was just sort of dead. It even after a while, it even started coming off. So he might have bought it for 20 cents, it got to 21, and then started creeping down again as the volatility come out of the market of the pricing of the option. So you'd never touch puts or when it's high volatility, it's always with options you're trying. If you're buying anyway, you always would prefer to buy in a low volatility environment, potentially like where we are now, looking to push to a high volatility. And if you get price on your side too, then great. So that's probably one way to attack it anyway. Uh, yeah, I'm not sure. Just US VIX. Yeah, you can trade options on the VIX easily enough, and there'll be a lot of people probably punting on that too. But the problem with that, there would have been people punting on a spike in volatility a long time ago, and just constantly their options are expiring worthless. So that's the one thing you've got to be careful of. Yeah, all right. What else we got? So, anything else there, guys? Anything else you want to take a quick look at? Oh, there's one. I might as well go over it then. Look at this. So today, 6 positions, one break even, 4 longs up, and 2 shorts. Very rare that happens, that your shorts actually go in your favor on the same day as your longs go in your favor. One worth noting, I was just got my eye on, well, look at that. I've got RBL, then we look at REA. Excuse me. This perked my interest purely because I read something somewhere. And I don't normally think that. I normally think funds will spruik it because they're trying to get out. I'm a real negative bugger. I read something about, they're talking to some fund managers. Which stocks do you like, in this sort of environment? So, it's a tough environment. One of them come up with this RBL. That's called Red Bubble, Red Bubble, Red Bubble. Um, saying it was good. They like this stock. It's the one with good fundamentals, growth, all that. So, the picture was looking really healthy. I always get negative when they say that because they're saying it to the general public. And if they're trying to buy into it, they just wouldn't be buying into it and telling everyone else because they wouldn't be able to get hold of the stock if it takes off, especially with this one. It's quite, I'm guessing, a little bit smaller than usual. So I got a bit, not negative on it, but then I started looking at the chart and thinking, look, it's got legs. We alerted this a while ago, somewhere around here, but it wasn't really that strong because it's more just thinking, okay, if this plays out, which actually it didn't, that was sort of what I'm looking at. Potentially it could pull back, build a higher low, and then go. Instead, it's coming all the way back down to sort of that 140 support. So that was what we're looking at that stage. So I just sort of left it alone for a while. It could have been, look, it could have been a buy through here. That would have netted you a bit, but then you've come all the way back down again. You would have got stopped out. But even then, we've got touches. We've got 1, 2, 3 on support. Okay, then you've got it to lift. But the thing is, it's gone. What you'll see, I can just get rid of it. I know it's broken through that anchor really to that downtrend. Even though that's it's broken out of that contraction lower, just broke out of the contractions, come back down and retest. That's a lot like the index we mentioned before. Just because it breaks out of contraction doesn't mean it's in an uptrend. It means that it could be in an uptrend soon. You're looking for the higher lows to confirm that. Instead, we've got to retest the lows. So that's just good excuse me, good confirmation. But you've got this high low. That was a good little indication that, okay, we're going to start to see higher levels. We've got a breakout here. But right now, what I'm looking for, if we just go and rinse and repeat that exercise through here, just today we're starting to break out. So this is ideally confirming another high low. You got 140 support, a high low, a more of a major high low at 150 confirming. So really, all I'm looking for now is, I'm going to have problems drawing this, drawing it in a different color. We've just up, come back down. We're just breaking up here. I'd ideally like to see it extend a little bit more, come back, and then go. And then from there, you've got a daily higher low off a weekly higher low. The market's potentially going into expansion again, and then you'd be looking to, the first stop would be at 185. If we just blow through that, and then you can extend from low to high there, extend that from low to high, you're going to be looking somewhere around 2 up towards these highs, 205. So that's could be quite a healthy little trade with minimum risk, as long as you can get that, you can assess that risk, and you can add quite a small risk profile to it. It might be 10 cents and you're looking to gain 30. That's a 3-1 trade. Away you go. So that's RBL. Thought I'd show that. So we get on to RIA. I think it was a weekly that I liked on this. I think we're just going to contract a bit. I think this low at 80 bucks is going to hold. Just looking at that weekly, we'll quickly draw up the weekly just to get a bit of our longer term bearings. Okay, so we're still looking to potentially, I'll draw that better because I think that's a cracker. We're still looking to really respect, and you can see that trend line. Respect that at the current stage, but the thing is we're just sort of working against at the moment is that double. It's only a double. It's not really a double top. It's not. I don't put too much, excuse me, on the weekly chart. And the weekly we've got a leg, pullback, leg, pullback, leg, pullback. That's all part of one leg. That's a pullback. It's not really a pullback. Yeah, and then we've got a pop up. So it could be a double top, but it's still holding. We haven't really broken the anchor, and the anchor at that stage was way down here. So it's not really a confirmed double top. Really, a double top is, for me, is when you get this top price action, you break through that anchor, then you start to work up again, and that's your double top. Well, if I can draw it properly, that's more of your double top there for me. Once you've broken the anchor and we start to work our way back up, then if you get a shoulder, I'd be short or out in that respect. So for me, that's a double top, not when you go up and you sort of contract like this and you touch the highs and you start coming down. I wouldn't say, well, I drew that properly. I don't see this as a double top as much because that's the anchor down here. We haven't broken the anchor. That's just really that's fluff. That could be just construed as fluff to try and scare people out. So from the weekly chart, I'm not really seeing that as a double top. It's more of that, okay, we've got a bit of pressure. It could be in anything, a good run up, short term, any buyers that bought it off, what is it, 80, 82.50, taking a bit of a profit off the table, $10 higher, booking it. But your long term traders still are looking for, they probably bought some here, it's touched up, yeah, around the 95 mark, a bit of a backed off, maybe re-adding to position down here. But that weekly trend is still well and truly intact. Excuse me. So going to that daily, it is a bit choppy. This is fairly choppy price action, but I'd like to think that we're going to hold a higher low. And the way I'd be constructing my trade on this is I want to see confirmation because we've sort of touched up there. On the daily, you broke that anchor. We've come back down. We've retested it. We've got our lower high here. We pressed down, but we're still in context to holding up above the weekly anchor. Excuse me. So we're in context to holding up. So if you can see, ideally, what a different color, just to make things pretty. That we could pop up here and then hold and go back down. You don't know. I'd want to see it. I want to see it pop up through there, pull back. I want to see this top price action, maybe pull back here, and then start to build a high low off the daily where I can assess my risk. I'm not taking too much risk. I know we're starting to roll up, and then I think that price action is enough oomph behind that top of price action to get us up and through. Was it 93 or 94 highs? But we'll see. So I think the daily, it's sort of coming into play. But for me, I wouldn't buy it just yet. That's just me. I'd rather buy it once it breaks up, pulls back, and get this top price action to buy into off another high low. Your daily high lows, it's a good weekly high low, showing strength in buying, stepping in at higher levels. Away you go. What was the last one? ALU. Nice, very nice. So the weeklies, and it's all in the perspective of the chart actually. If you just scrunch up the chart a bit, it doesn't look too bad at all. The weekly look at that weekly up, pullback, really nice action, a good pullback, respecting the trend still. The high low was still well and truly intact around, say it's just below $20 in here. Respected it here, and then boom, you got that acceleration up. You've got this pullback, you got probably one, actually not really. That's really one pullback, pop up, and we could easily just go from here. The weekly looks good, no qualms with the weekly there. The daily, I'll just drill on that a bit more, drill down in that. down in on that. That's the words. I think, look at a few things here. Yeah, we're just coming out, so I'd expect this level to hold, which is basically where it broke out from, around 25. From here, I'd probably just, it's just that same old trick. We've just got that pop up. Love to see inside levels, and then boom, up she goes. So that there, you've just got these inside higher lows holding off a major higher low around 25, and then trading off your daily with the weekly wind in your sails, if that makes sense. Excuse me. All right, and you can see this is probably a little minor level too, around, what was it, about 26 and a half. So yeah, I think this is starting to lift. I just want to see, I don't want to see it touch down at 25 basically. If it comes down from here and we go down through 25, okay, you have to just, could be looking at a gap fill, could be looking at anything. And that 25 level comes all the way back here too. All right, so really, yeah, just I'd be looking for that higher low off 25, somewhere around 25 and a half, or pretty much where we are now. Where are we now? 27. I can't count. How are we up at 27 there? I've got my data wrong. And I've got my data wrong. Forget everything I said. It's lifted and it played out to perfection. Looking great. There you go, Helen. I just caught on to it. You know how slow I can be sometimes. It looks great. Look where the daily is. And that those last couple of days, there's some good little acceleration. It's put on some healthy gains of what, 2%, probably 2% yesterday, 3% yesterday. And it's well and truly in that oversold zone starting to lift. So if this goes overbought, we could easily have pushed through 30 bucks from here. Looks great. All right, I might have to call it a day there, guys. Helen's got me beat. All right, we'll finish up there, guys. I hope you enjoyed all that. Any questions, feel free to, you can shoot us an email. We'll see if we can get in contact and answer your questions. If you've got a question on a chart and you're just having something you've got or something you're worried about, just send it through, email it through, and I'll see if I can get back in contact with you, send up a chart. My opinion could be right or wrong, who knows, but I always give my opinion on everything. Also, if you want those charts, just the intraday, just for something to look at, something to work through, feel free. Anyway, guys, thanks very much. Enjoy your weekend, and we'll speak to you again on to Monday. Cheers, guys. Bye.